whatever you do, do not trade the headlines. The US and Iran are literally fighting an information war. That violent rip in US equities and gold last night was directly triggered by a headline about a potential Iranian ceasefire. But if you piece together the recent rhetoric from Iran, Israel, and the US, it's a blatant psychological op. Their ultimate goal to cool down oil prices and buy time. And plus, the market has been bleeding for so long, and sentiment is extremely fragile, and it desperately needed a bullish catalyst to spark a technical bounce. Even if the headline is total garbage, as long as it ignites sentiment, it's enough to send prices flying. And notice how the headline had to come from Iran to actually move the needle. Why? Because Trump has cried wolf too many times. The market is completely desensitized to his tweets, and only when Iran hints at peace talks will the market actually start pricing in an end of conflict scenario. So here's my macro take. The headline-driven pump that helped gold reclaim $4,700 during the European session this morning is purely an oversold technical bounce, not a macro trend reversal. Stock moved 11.8% in March, its worst amount since 2008. In this severely oversold territory, any slight breeze would trigger massive short covering, squeezing the price higher. This is not fresh long money stepping in. Looking at EBC market buzz, even with this aggressive rip, overall sentiment on gold remains cautiously bearish. The smart money still sees this as a classic dead cat bounce. Now let's pivot to US equities. The Nasdaq ripped nearly 4% last night, and a massive chunk of that was driven by the JP Morgan Hedge Equity Fund. They run a massive collar strategy, buying puts for downside protection while selling calls to finance to trade. At the end of every quarter, like March 31st, this fund has to roll and reset its massive options book. This quarterly roll creates insane volume, forcing market makers into massive delta hedging operations. Last night's melt-up was just a technical options reset combined with a fake news headline. But the real macro focus is still all about crude oil. Even though oil took a quick dip today, with Brent briefly cracking below 100, I am only trading this with extremely light size. Like I said in my video 2 days ago, Trump and Iran are literally penning the charts for each other right now. The exact moment you're falling into a bullish headline, Iran might launch another missile. If you blindly buy the breakout, you will get trapped at the absolute top. If you short the breakdown, you will sell the absolute bottom. So my playbook is simple. Fade the bullish news with shorts and buy the blood on bearish news. The market rhythm this week is identical to last week. Bounce on Monday, peak on Wednesday, and then flip straight back into risk-off mode. So to wrap this up, yes, today's pump is real and the sentiment shift was real, but the macro fundamentals haven't changed one bit. The word is still on, the straight is still black, and oil is still elevated. If you are thinking about chasing this headline pump, think twice. A headline-driven melt-up like this can reverse the exact second Trump opens his mouth again, especially with Trump's schedule for a national address tomorrow. And finally, macro calendar hasn't changed. April 3rd is the non-farm payrolls, NFP, and April 6th is Trump's deadline. We won't get true market direction till next Monday. That's why we will know if today's bounce was an actual macro bottom or just another brutal bull trap. And as always, this is just my personal macro read and logic, not financial advice.